I want to mix up my markets as much as possible. But as active traders, and when I talk about being an active trader, what we classify that as is looking to take positions anywhere from 24 hours on out to a few weeks. That's what we classify a swing trade. So I want to be active. I want to go to products that have a track record of moving on a regular basis. So Apple, Microsoft, Nvidia, Tesla, these are names that are in the headlines. They're active on a regular basis. They have great liquidity in the options. And if we take a look at that whole list of the tech stocks, and I'm just going to pull up a quick chart here a second, and we'll take a look because there's a lot of these patterns setting up where you've had big moves. Here's Amazon. You've got this big move to the downside. If I take a look at my pulse indicator down at the bottom, that's giving us a 2 standard deviation move on the downside. What that's telling me is we're at a point of interest that historically has led to either a period of consolidation or even a bounce in the other direction, in this case to the upside. So this gives me an interesting opportunity over the next week or two where I could potentially look at selling a put spread, looking for a bounce to the upside, not expecting a huge follow through back up to all-time highs, but I'm just looking for a bounce over the next few days, right? So if we take a look at Apple, Apple has actually gotten through the last couple of weeks in a pretty decent pattern. We have not had that big move to the downside. So I'm looking at that as a potential area of relative strength.